Good evening, students. Now, in this session, we may discuss the concept of accounting. We already discussed about the concept of bookkeeping. Now, we are going to discuss the concept of accounting. Here, I already told you that about the accounting cycle. When the business is following the double entry system of bookkeeping, it includes this accounting cycle. Taking place of business transaction in the business, and it ends with preparation of final accounts to know the business result. Here we are going to discuss about accounting. What is the meaning? Accounting is the art of recording. Accounting is the art of recording. Recording here refers to recording the business transaction in journal. Recording the business transaction in journal. That is called as recording. And after recording the journal entry, classifying. Recording is the first process of accounting. Next one is classifying. Classifying the accounts with the help of ledger. After recording the journal entries, the journal entry is posted to ledger. Through this ledger accounts, separate account is opening for each and every transaction. Say for an example, if you are affecting cash sales, for rupees 10,000, here the journal entry is cash account data to sales account. Cash account is debited and sales account is credited in the journal, and this journal entry is posted into the ledger by preparing a separate account for every transaction, every aspect. Cash account is separately opened and we are posting the entry in cash account. Also, sales account is opening and the entry is posted in sales account. That is called as classifying. After recording the journal entry, both debit and credit aspects are classified and separate accounts are opening through the ledger. That is called as classifying. Next process is summarizing. At the end of the year, all the transactions which are taken place in the business should be summarized to find out the business results, whether the business is earning profit or incurring loss. For that purpose, the ledger account is balanced and the ledger balance is transferred to trial balance. At the end of the year, ledger account is balanced and the balance of ledger account is transferred to trial balance in order to know the accuracy of the transactions recorded in journal and ledger. Here the trial balance is prepared for the purpose of knowing the accuracy of the journal entries and ledger account, whether we are committing any mistakes or not while recording the journal and ledger. For that purpose, we are preparing trial balance. Preparation of, we can summarize the business transaction through the preparation of trial balance, right? In a significant manner. Significant means step by step. First, there is a business transaction is taken place in the business, and this business transaction is recorded in journal. That is called as recording. And after recording the journal entry, that journal entry is posted to ledger account, that is called as classifying. Here, after preparing the ledger account is balanced at the end of the year. The ledger balance is carried forwarded to trial balance, that is called as summarizing. This is the step-by-step procedure, that is called as significant manner, orderly manner, right? In terms of money, that is very much important. We have already discussed the concept of bookkeeping. There also we explained that all the business transactions of financial nature, only the monetary transactions can be recorded in the accounting books. Non-monetary transaction should not be recorded in the accounting book. So that here it is specifically mentioned that the transaction in terms of money transactions and events. Whatever may be the transactions and whatever may be the event taking place in the business, and it can be measured in terms of money, can be recorded in accounting books. That is, say for example, cash sales, it is a monetary transaction. Employee skill is a non-monetary transaction. Both are essential for profitable running up of the business. Here we can record the cash sales transaction in the accounting book. We cannot record the quality of the employees, skills of the employees in the accounting record, because it is a non-monetary transaction. We cannot measure the quality of the employee in terms of money. So only the monetary transaction can be recorded in the accounting books. Events which are of financial character, that is monetary transaction. And interpreting, the fourth step is interpreting the result, right? After summarizing the business transaction through the preparation of trial balance, we should interpret the result by preparing the final accounts. The main aim of maintaining the accounting record is to know the business result, whether we are earning profit or loss in the accounting year. So for that purpose, we have to finalize the accounts, right? That is called as for the purpose of interpreting the results. In the final account, we are preparing trading profit and loss account and balance sheet. Through that, we can know the gross profit or gross loss through trading account, and the net profit or net loss through the preparation of profit and loss account, and we can know the financial position of the business through the balance sheet. That is called as interpreting the result. Here the 4 steps are involved in the accounting cycle. This whole process of accounting cycle is called as accounting. Whole process, the entire process included in the accounting cycle, starting from the business transaction and ends from finalization of accounts, is called as the term accounting. Here from business transaction to preparation of trial balance, it is called as bookkeeping. Here accounting includes bookkeeping. Bookkeeping is the part of accounting, right? Thank you, students. I hope that you understood the concept of accounting. Thank you to all.